War has proven the biggest driver of financial innovation. War forces governments to scramble to find cash, or to invent new ways to generate cash. And war is the origin of the first income tax. Welcome back to Economic History Files. I'm Alexander Paris-Callahan. Today, we're talking about the invention of the income tax. In 1913, the 16th Amendment to the United States Constitution made a federal income tax permanently legal. However, the income tax had its origins about a century earlier. In the later part of the 18th century, Britain was looking for ways to pay for its war against revolutionary France. As is always the case, this war wasn't cheap. In 1798, Prime Minister William Pitt introduced the first ever income tax as a way to raise funds. This first tax, however, didn't work out. So, in 1799, Britain tried again. This time, they introduced a 10% tax on income above £60. The tax came and went with the tides of the war. When Napoleon was finally defeated in 1815, Britain scrapped the income tax altogether. Soon enough, though, Britain was short on cash again and brought the income tax back in 1842. This time, for good. The new tax was a small 3%, and it laid the foundation for the income tax system that countries still use today. On the other side of the Atlantic, the United States had its own war-driven money problems a few decades later. When the Civil War broke out in 1861, the federal government found itself in need of cash quickly. At the time, the government raised most of its money through tariffs. This traditional revenue source, however, couldn't raise enough to fight the Civil War. Under Abraham Lincoln, the US government also established an income tax. Congress passed the tax law in 1861, but as with many things in politics, there was no smooth implementation. The first tax day was supposed to be June 30th, 1862, but Congress wasn't ready. After some back and forth, they pushed the first tax day back a year and finally settled on an amount: a 3% tax on incomes over $600. This income tax was one of the many ways the government raised money during the Civil War. There was also excise taxes, bonds, and the government issue of paper money for the first time. Just like in Britain, once the Civil War was over, the income tax was ended. Later, the US Supreme Court struck down efforts to enact a new income tax. It wasn't until 1913, after the amending of the Constitution, that the US adopted a permanent income tax to wrest money from industrialists. Thank you for watching this episode of Economic History Files. Please like and subscribe for more on the history of money.